S-Corp Basics. If you're ready to be your own boss, an S-Corp may be right for you. Starting a business can be an exciting and challenging opportunity, but in just a few steps, you can make it happen by becoming an S-Corp. An S-Corp is a tax status that allows business owners a flexible way to start small and to grow their business. S-Corps offer limited liability protection, so the owner's personal assets can't be accessed by business creditors in most cases or legal claims against the company, and they don't pay any corporate taxes on any earnings and income that the S-Corp generates. Let's talk about steps to create an S-Corp. A business must first be incorporated. If you do not already have a legal business entity, you will need to choose an available business name and register with your state's business formation agency. And then you'll need a federal employer ID number, also known as an FEIN. If you meet IRS requirements, you can then elect S-Corp status by filing Form 2553, which is the election by a small business corporation. The key characteristic of an S-Corp is the pass-through tax structure that refers to the taxation method where business profits pass through the S-Corp and are directly taxed on the owner's individual income tax return. This allows the S-Corp profits and the losses to be reported on shareholders' personal tax returns, avoiding double taxation. An S-Corp identifies you as both the employer and the employee, so you get to take the deductions of the employer and also enjoy the benefits of being an employee. This divides your income into two different parts. You have the salary and the owner's distribution, and you only pay self-employment taxes on the salary portion. The IRS requires that S-Corp owners pay themselves a reasonable salary for the work that they perform. It's crucial to maintain a proper balance between salaries and distributions according with IRS guidelines. You might ask yourself, why even form an S-Corp? One of the biggest reasons is the deductions that S-Corps offer. You get deductions for health insurance premiums, rent, utilities, insurance, equipment, vehicles, services, food, and the list goes on and on. Once those losses are accounted for, you'll be required to pay taxes on the profits at your personal tax bracket rate. But even that profit has a deduction, and this one's called the Qualified Business Income Deduction for pass-through business owners to deduct up to 20% of their business income. The S-Corp also offers many different retirement advantages. There are several different retirement account options available, which include the traditional IRA, Roth IRA, SEP IRA, Simple, and the Solo 401k. Well, that's S-Corps in a nutshell, basically covering the owner-operator scenario, and doesn't yet go into having employees, shareholders, and stock. If you're curious to see how an S-Corp could play a part in your financial future, contact Pure for a free financial assessment and get your questions answered.